Well, happy Wealth Wednesday. We are talking joint bank accounts today with FirstOntario Credit Union investment specialist Yvonne Delry, who is registered with Credential Asset Management Inc. to provide investment advice. So this kind of follows our last discussion last month. We were talking about financial power of attorney. Now we're talking about joint bank accounts, because some people think, well, if I have a joint bank account, it's the same as a financial power of attorney, but it's not.
But it's not. It's not. So a joint bank account is where everybody who is named on the account has equal ownership of the funds that are in the account. So they do not need to consult with each other to be making any decisions for withdrawals, deposits, anything like that. There is no tracking of who deposits what's money or where the money originated from. So everybody has got equal access. A lot of spouses use joint bank accounts.
Yeah.
They want to pay for joint expenses, marital expenses, things like that. But where we also see this happen is where parents who maybe one spouse has passed away and now they want to add their adult child or children onto their bank account.
Okay, and can we run into some problems with that? Because there are benefits to it. You can kind of see what's happening.
Yes, so there are some benefits to it, which we will get into. I think the first consideration is the trustworthiness, really for both roles, whether it's the power of attorney or a joint account holder. So you want to make sure it's somebody that is trustworthy. With a power of attorney, like we talked about last month, the individual doesn't take ownership of the funds, but is going to do things that are in the best interest of that person that they have the power of attorney for. With a joint bank account, they become owners of the funds. So if they run into any financial difficulty of their own, if they are not working, there could be the temptation that they think, I'm just struggling right now, let me just kind of dip into it and I will replace it later. There's also other considerations that we really should be looking at. If one of the joint bank account holders runs into a separation, divorce, if they run into legal issues where possibly they are sued, or if they run into creditor issues, so their bank accounts are being garnished, anything like that, these are now attachable assets. So we need to really make sure that we understand that and make the best decision.
So are they a good idea or not?
No, I think that they've got their benefits to them. It allows for continuation of the assets also if one of the joint account holders were to pass away.
Because then it's not frozen.
It's not frozen and they're able to continue on with doing any of the transactions. Again, though, where we need to be aware is that accounts and investment accounts are held what they call joint and several, which means that if one of the bank account holders passes away, the other person automatically takes ownership of the funds. So if there are multiple beneficiaries or multiple siblings, this is where there could be a family dispute. This is where there could be legal action if one of the beneficiaries thinks that they have rights to the monies through inheritance. So understand wills, power of attorneys, joint bank accounts, benefits, risks. Talk to your advisor, figure out what is best for your situation and for your family.
Okay, some great advice, Yvonne, always. Thanks very much. We'll look forward to talking to you on the next Wealth Wednesday. We'll get all the details up on our website, chch.com/morninglive.